Are you paying tax on your crypto in Australia? Here's what you need to know in just 5 minutes. Yes, crypto profits are taxable, but there are legit ways to save if you play it smart. Welcome to our channel, the one place for crypto education. And here we explain topics of the cryptocurrency world using analogies, stories, and examples so that you can easily understand them. In this video, we are going to explain how the Australian Taxation Office sees cryptocurrency and how they tax it. The price of Ethereum has been going down since the beginning of 2023. It started off around $3,000 and now sits around $300. Now, if I bought some Ethereum in January for $3,000 and sold it today for $300, do you think I would have made or lost money? I would have lost $3,000 minus $300 equals $2,700. But if I reported this to the ATO, would I get a refund on my taxes? Since I didn't make any money, the answer is no. First, crypto is classified as property under ATO rules, same as stocks or real estate. So when you sell crypto, that transaction is a CGT event and any profit is taxable. If I held my Ethereum for more than 12 months, I would get a 50% discount on the loss. So instead of a $2,700 loss, I could say I had an $1,800 gain, which I would then be taxed on. But here's where it gets a little bit tricky. Swapping crypto for other crypto can also trigger CGT. Staking, bridging to layer 2 or wrapping tokens can all trigger CGT even if you never convert back to AUD. So swapping ETH to USDC, taxable, moving assets across chains, taxable. A lot of investors don't realize this, and the ATO is watching. The ATO works with exchanges and other parties to obtain your transaction records. They've been doing this with exchanges like Binance, Coinbase, and most recently, buy now pay later giant Afterpay. In fact, the ATO has a whole program to catch people who aren't reporting their crypto gains properly. They gather information about your crypto activity, such as buy and sell orders, wallet transactions, and even IP address. So if you don't report gains properly, expect a letter, an audit, or in worst cases, penalties. In fact, the ATO believes up to 1.2 million Australians could have unreported gains, with many more millions in the dark about their tax obligations. So what do they actually do? Well, let's find out. The ATO has stated that it will start taking action against crypto investors with unrealized gains exceeding $3 million. That means if you hold more than $3 million worth of crypto, you may be taxed on the difference between the purchase price and market value of those assets. Now, the Australian Taxation Office is looking into taxing unrealized gains to increase compliance with the current tax system. This new measure may come into effect from July onwards. There is a bit of a loophole here though, which I'll mention in a later video. But for now, make sure you're keeping track of your crypto gains and losses for the financial year. Another interesting piece of news is a recent court ruling suggested Bitcoin should be treated as money for tax purposes rather than property. This could mean that transactions are not subject to the capital gains tax, but it also won't be eligible for the 50% discount for long-term gains. However, the changes won't take place anytime soon. So quick summary, crypto profits are taxable. You can reduce your capital gains by holding crypto for more than 12 months. You must also report crypto to crypto trades and swaps. The ATO is watching for unreported gains, and potential changes may tax unrealized gains if your total crypto assets exceed $3 million. So what can you do? 1. Keep crypto for 12 plus months for the CGT discount. 2. Track all transactions, including DeFi and swaps. 3. Use software like Cointelegraph or Coinly to stay compliant. 4. Consult a crypto tax accountant for complex transactions. That's all for this video. We hope that you've enjoyed it. We really hope that maybe you've learned something. And most importantly, we hope to see you in the next video. Remember, this is for educational purposes only and not financial advice. We're just two guys in a room trying to help you become financially free.